Everyone, sorry I'm not playing disco today. It's just a fast video. I'm kind of late, that's why I want to make this video. This is the Dow Industrial. I hope everybody's doing fine. As I was tweeting to my 10 followers in Twitter, and I only have bots. I swear to God, so many robots I have in Twitter. Only have 10 to 15 followers maximum. And they're good enough for me. I love them. As I tweeted to them today, the possibility of a mini Head and Shoulder, even when it was green, just because of the volume analysis and Elliott wave, and I'm speculating anyway. So I was tweeting the possibility of Head and Shoulder. So let's see what our assumption now. 5 waves down, 1, 5 wave complex correction. 2, it was ABC up, W, and X, ABC up again, Y, 2, and as I said before, as I explained, that negative divergence come with a lot of not terminal waves, like the end of each wave. Like this A, we had a negative divergence in the stochastic, and we had a negative divergence here in the stochastic and the IWM, not in the Dow, and we had the multiple negative divergences between this point and this point in the stochastic and in RSI. I explained it's like triple divergences, and that gave me the assumption of 2. And I still think it's 2. I know it's very stupid and too early, but I'm stupid, and this is okay by me. So this is the second wave conclusion. Let's go to conventional technical analysis. So I was this is usually the duration of the Head and Shoulders about 8 weeks. So but we don't have to be stuck by the definitions and duration. It's all about the psychology. That's why we believe in these patterns. So this pattern is a Head and Shoulder psychology, even if the duration is not that long. So we have a shoulder and a formation of shoulder. Now we have the head, and this is the neckline. And as I stated many times, that the distribution volume is extremely obvious. And I thought the rally yesterday would be in high volume, but I was wrong. It was in a slim volume. I tweeted it's going to be high volume, but I was wrong. So it was in a slim volume. So my assumption now is Head and Shoulder and conclusion of 2. So we're going to break this bad boy, and we're going to have a measure move of this pattern to almost 25. I think it's going to be right here. This measure move for this mini thing, and this is, I used also Elliott wave to give me, this is 1, and mini 2, and 3 is going to resume, even though the Fibonacci retracement is only 38%, but it's okay. This is a mini count. It's not a major count. And I did tweet yesterday too that the price action is at seller's area. This area here represent the older price memory here and here. Okay, let me use this. A lot of people are complaining that they can't see that. Okay, so the price action stalled yesterday at the older price memory. It's right here, the low here, the high here, and this low here. In addition to that, it's the Fibonacci retracement from this point to this point. So it was a perfect place where the sellers gather, and they did sell it, and it was at the end of the day. And today we have like a sandwich kind of candle, and also the price action stalled at the buyer's area. So it's an older price memory here, and also it's the neckline. So it's definitely a buyer's area now. And in addition to that, it's the lower end of the Bollinger Band, yet it's sloping down. Usually when it's sloping down, that means the price action might, that's a start of of a volatility. So that means if the price action go down tomorrow, it might not hit the Bollinger Band, because see what's going on here. It's the start of the move. So even though it is at the lower end of the Bollinger Band, yet if it opens low tomorrow, it's going to be inside of the Bollinger Band because it's sloping down. So conventional technical analysis telling me head and shoulder, volume distribution, and we are in the making of lower low. So I'm talking about conventional now. We have high, lower high, and we might have a lower low, and that lower low will give us the formation and the registration of the head and shoulder breakdown. Okay, good. So great. Let's look at the VIX. The VIX now, it's forming a sort of bull flag, a very deep bull flag too. And this is the first time that the MACD crosses over the zero line since here, and it's been longer now. It's even though the histogram is ticking down, yet the MACD is already out inside of this bullish area, and the last time it stayed that long was during that time, because here it was so brief, but now it's obvious. So now we have a formation of a very deep but still nice bull flag, or also bullish wedge. See, it's very obvious now. See, this is a good one. That's a continuation, hopefully, to the upside for the VIX, and we could look at the Fibonacci retracement, and we see. So usually when you find buyers at the 62 Fib retracement, that means this is 1, 2, 3. So you might have a strong and it doesn't need that much momentum to break this bull flag or bullish wedge. So this is really good, and it's definitely a bullish development. So the bullish development is we're in the making of a bull flag, bullish wedge, and the MACD is inside of the bullish area. So this is the VIX. All we need is a little tick upside, and it's gonna happen. This is the price action, and also this is even in an Elliott wave. We might go through an impulsive wave up very soon. So this is the thing that I did myself. I noticed for years and years. Once this is the put to call, equity put to call, and as I explained before, the closer to 1 is the equilibrium, is the equal balance. The 1 is, that means the bulls and the bears power is equal, and less than 1 favors the bulls, and more than 1 favors the bears. But it's contrarian. So if you think it's favoring the bull that way, that means bearish, and vice versa. But that's not what I want to talk about now. I'm talking about the quantitative methods in the moving averages. So this is the in red, this is the 20-day moving average, and in blue is the 50-day moving average. And every time you have a bullish crossover, you have a major move in the market. This happened in the correction in August, and this is the last pullback before that last bull run in October, when we had like a beautiful hammer after hitting the lower end of the Bollinger Band in the Dow Industrial. So that was the last pullback before the last bull move. The last pullback for the last bull move. This is now the flush. And see what happened. And after the flush, the bull run took place after the bearish crossover. And you could look at the Dow chart. It's extremely. I noticed this is extremely self-fulfilling. I don't know if it's self-fulfilling, but I've seen it so many times. So now it's official. It's the bullish crossover, and this happened yesterday before the down day today. So that's an indicative of a major pullback coming in the Dow and the market as a whole. And this is the UEP, the ETF for the dollar. And today I think it's the last hurrah. And I did do the count, the Elliott wave count. One is here. This is A, B, and this is C. C equals to 1. So A, B, C, 2. Sorry, 2, not 1. 2. Some people call it differently, but this is my 2, and we're gonna go through 3 in the dollar. So as I said a couple of days ago, the moving averages are flattening now, the 10 and 20, which increases the possibility of a major move and a volatility coming. And also the Bollinger Band is tightening in the pipeline formation too. That means the volatility coming too. And as I mentioned yesterday, every time the RSI goes over 50, that means the momentum is really strong. And this is, even though you don't have, so this is a bullish engulfing, but you don't have a trend yet. So there's no trend. But I'm gonna call it bullish engulfing, but it's not. But the purpose of it, you opened low and you closed over the body of yesterday, and also at the high, which is really bullish. And the stochastic is extremely beautiful and going all the way. This is if you think that overbought is bad, overbought means momentum's good, and you might have an embedded momentum, and which means a very strong bull move, like what happened here. You went over 80 and you have that beautiful, you locked in that momentum and you have that beautiful up leg. You might have something like that now in the Dow and in the dollar. So let's look at the Bollinger Band too, just to have an idea of what's going on. See, this is the pipeline formation, and it's indicative of a volatility coming, and it's most likely it's going to come to the upside. And also, if you think about it too, if you think about some strategies like alligator strategy, now you have the official alligator strategy, the bullish one, because you have the 5 going over the mini moving averages. The bullish alligator strategy consists of the 5-day moving average, 8-day moving average, and 13-day moving average. If you have a bullish crossover where the 5 crosses over everything, that means a very bullish move might come very soon, like what happened here, and bearishly like what happened here and what happened here. So a lot of things going for the dollar now, especially, and also the sentiment is very bearish, which is good for the dollar too. And also you have a bullish crossover that took place here and is still in effect, and the histogram is going up. This is the highest since a very long time. Sorry, sometimes I forget to activate the crossover here. Okay, so it's the highest since June, and it's going up. If it goes to this territory, it's extremely bullish. And I think today is the last hurrah for the euro. And not to mention, as I always say, and I said I'm amazed that some technicians don't care about the divergences, but in my experience, it always means something major is going to happen. And the beautiful bullish divergence between the price action and the RSI is amazing. And also the RSI is an uptrend. If you see high, low, higher, low, higher, low, higher, low now, and you're going over 50. So really, a lot of things are aligning now. For the market to go down, the VIX, the dollar, and Elliott wave for the Dow, and all this stuff. And I wish you guys the best. I'm sorry I didn't play any disco. I really am sorry, because I love disco, and disco's forever.